Good morning, everyone. So today I'm going to solve several important questions from the chapter titled Accounting for Corporations. So today I'm going to solve 4 questions and try to understand the questions carefully and see the solutions. If you have any question, you can stop me anytime. So look at the first question. Is about dividend distribution. So the problem 1 is about dividend distribution. Let's see the question first. ONG Construction has the following stock outstanding. Common stock $1 par value, and the number of shares outstanding of common stock is 100,000 shares. Then we have 2 types of preferred stock. We have preferred stock cumulative, and we have preferred stock non-cumulative. So they have different accounting treatment, you know that. When we distribute dividend, they have different rules for cumulative and non-cumulative. So this is the common stock. This is the common stock, preferred stock cumulative, preferred stock non-cumulative. And this is the information about the dividend. Dividends were not paid. Dividends were not paid for the last year. Last year, company did not pay any dividend. But in the current year, company declares dividend $50,000. So last year, they did not provide any dividend. This year, they declared $50,000 dividend. So this is the story. So I suggest you have to calculate the amount of dividend from the very beginning before solve the question. So 5,000 shares. 5,000 shares times, shares times par value $100. Par value is $100 times 3%. Times 3%. Okay, times 3% is the dividend, right? So what is the amount of dividend here? So the amount of dividend here is $15,000. So this is the amount of dividend for cumulative. So this is the amount of dividend for cumulative. So you have to calculate this from the very beginning. Now we are going to calculate the amount of dividend for non-cumulative. 3,000 shares. Okay, 3,000 shares, par value $50. Par value $50, and the 6% is the interest. 6% is the interest. Okay, so the amount is $9,000. $9,000 dividend for non-cumulative. For non-cumulative. So we calculate $15,000 dividend for cumulative, and we calculate $9,000 dividend for non-cumulative. And the total dividend is $50,000. So when we solve the question, we have to remember that we cannot pay more than this $50,000. So total dividend is $50,000, right? You cannot pay more than this money. Now this $50,000, some part goes to preferred stock cumulative, some part goes to the preferred stock non-cumulative, and some part goes to the common stockholders. And how to allocate this? Question says that last year dividend was not paid. So cumulative shareholder cumulative shareholder will receive? They will receive previous year unpaid dividend first. So it is called dividend in arrear. So dividend in arrear. Okay, so another name is called unpaid dividend. It's called unpaid dividend. So cumulative people will receive unpaid dividend first. So 2020, they did not receive. 2020, they did not receive this money. So they are going to receive this money first, right? Not 2020, it is the last year. Last year, they did not receive this money. So this is the money they are going to receive first. After that, they are going to receive current year dividend. And current year dividend also $15,000. Yes. And total, they are going to receive $30,000 dividend. So from $50,000, is the total dividend. You can see total dividend. $30,000 goes to whom? Cumulative shareholder, right? Cumulative preferred shareholder. They will receive previous year unpaid dividend first, then current year dividend. Now we are going to pay dividend for non-cumulative. So this is the dividend for non-cumulative. So in case of non-cumulative people, they are not going to receive any previous year unpaid dividend. You know that, right? They are not going to receive any previous year unpaid dividend. They are going to receive only current year dividend. So what is the amount of their current year dividend? It is $9,000. So they are going to receive only $9,000. So if we add this to 0 plus 9,000, they are going to receive actually $9,000. So again, total is $50,000 dividend. Cumulative preferred shareholder will receive 30,000. Then preferred stock non-cumulative will receive 9,000, and remaining is 50,000 minus 30,000 minus 9,000 is $11,000. $11,000 goes to common shareholder. Yes. So look, total $50,000, right? $30,000 goes to cumulative preferred stock. $9,000 goes to cumulative non-cumulative preferred stock. $11,000 goes to common stock. Total $50,000, right? So this is about the question 1. Now let's move on question 2. So question 2 have two parts, part A and part B. So we have a connection between part A and part B. So when we solve part B, we have to consider information available from part A also. So that's why you have to read the question carefully. If you have part A, part B types question, there are some connections, so you have to read them carefully. Okay, let's see part A first. So Nathan Athletic Apparels has 15,000 shares. 15,000 shares, 6% is their dividend, $100 par value, and they are the preferred stock. So we find that company issued preferred stock. How many preferred stock they issued? They issued 1,500 preferred stock, and par value $100, and 6% is the dividend. And they issued it which year? They issue this share, they sell this share in the year 2020. So here you have to record dividend, calculate dividend. So what is the amount of dividend? So you have to do it, the amount of dividend. So again, shares times par value $100. Okay. And the times 6%. Times 6%. So this is the dividend. This is the dividend. And it is equal $9,000. So preferred stock dividend, we find that preferred stock dividend is $9,000. We calculate this, right? So you have to do it from the very beginning. What is the amount of preferred stock dividend? And when company sell this stock in the year 2020. So as you buy this stock, okay, as you buy this stock at the beginning of, look at here, at the beginning of 2020, it means that you have the right to receive the dividend, right? You are entitled to receive the dividend because you buy it from the beginning of 2020. And all shares are remaining shares are the common stock. Only 1,500 share preferred stock, and all remaining shares are the common stock. And company was not able to pay dividend in 2020 and 2021. So 2 years, company did not pay any dividend. Company not able to pay any dividend last 2 years. You buy it 2020, right? 2020, you did not receive any dividend. 2021, you did not receive any dividend. However, in the year 2022, company declared and paid $22,000 dividend. Now, according to part A, assumption 1, assuming that the preferred stock are cumulative. Okay, the first assumption said that preferred stock are cumulative. How can we allocate this $22,000, okay, $22,000 of dividend to the preferred stockholders and the common stockholders? So this is requirement 1. Let's see the solution. So here again, total dividend is $22,000. Is the total dividend. You cannot pay more than this $22,000. Now this money is going to allocate to preferred cumulative shareholder. So it is something like this. First, dividend in arrears. That means unpaid dividend. So the unpaid dividend is for 2020 and for 2021. So these 2 years, company did not pay any dividend, right? Company did not pay any dividend. So these people will receive this dividend first. That means 2020 unpaid dividend and 2025 to 21st unpaid dividend. And it is, according to this question, we already know that dividend 9,000, right? 9,000 and 9,000. So this dividend they are going to receive first, unpaid dividend. After receiving unpaid dividend, they are going to receive current year dividend. And current year dividend is about, so this is current year dividend. And this is actually 2023. This is the current year dividend. Now we have to keep it in our mind that we have total $22,000 dividend, and we cannot pay more than this money. We cannot pay more than this money. So $22,000 dividend. So for 2020, we already paid $9,000. For 2021, we already paid $9,000. Right? Now, how much dividend? The maximum amount of dividend the cumulative shareholder will receive in the current year. What is the maximum amount of dividend they can receive? How much? $4,000, right? Yes. $4,000 they can receive highest amount. Although they are entitled to receive $9,000, but they cannot receive full money because company declared less amount of dividend. If this is the case, what is the common stockholder dividend? Common stock dividend is $0. $0. Right? Yes. So this is all about part A. This is all about part A. So what is the problem about part B? Refer to the data for Nathan's athletic apparels in part A. That means you have to consider data from part A. After considering this, the company declared $20,000 dividend. Company declared $20,000 dividend in the year 2000. So here, not 2023, it is 2022, right? Clear? There's mistake. So 2020, 2021, and 2022 is the current year dividend. Because part B, yes, part B is about 2023. So in the year 2023, company declared $20,000 dividend. Okay. And to distribute this dividend, you have to consider the data remaining in part A. Now, total dividend is $20,000 for 2023. Is the total dividend. So we are now in part B. So you can see the comparison. Part B. Total dividend is $20,000. Is the total dividend. Now, preferred shareholder will receive previous year unpaid dividend first, right? Because they are cumulative. So they are going to receive unpaid dividend first. So unpaid dividend is from 2022. Can you remember? 2022, they should receive $9,000, right? They should receive $9,000, but they receive only $4,000. So unpaid dividend for 2022 is how much? 5,000. This is 5,000 unpaid dividend for 2022. And after that, they are going to receive current year dividend. So they are going to receive current year dividend. So current year is 2023. So what is the amount of current year dividend? It is $9,000. It is $9,000. So this is the dividend they are going to receive first, right? 9,000 for current year dividend and 5,000 for previous year unpaid dividend. Now, how much common shareholder will receive? Because we done preferred share cumulative. How much common stockholder will receive? So we have total 20,000. We paid 5,000 for unpaid, 9,000 for current year. So the remaining is $6,000 goes to common stock shareholder. Okay. So total is $20,000. So this is about question 2. This is about question 2. So question 1 is about distribution of dividend. Question 2 also about the distribution of dividend. Now question 3. So question 3 actually the comprehensive question. It is comprehensive. Why it is comprehensive? Because you will find all the concept together here. So this question include common stock, okay? This question include preferred stock. This question include treasury stock. This question include dividend, okay? This question include how to prepare the statement of stockholders' equity. So this is a comprehensive question. It is a comprehensive question including everything. Now let's read the question. So ONGO construction has 2 classes of stock authorized. So they have 2 classes of stocks. One is called common stock and another is the preferred stock. Now we have another important point here. What is the par value of common stock? $1 is the par value and $10 is the par value of preferred stock. So we know common stock par value, we know preferred stock par value. So what is the meaning of par value? The value mentioned on the share, right? Mentioned on the share, but the market price may not be similar. Market price may be equal par value, market price may be higher than the par value, or market price may be lower than the par value, right? So these 3 together can happen or separately can happen anyway. And 6% is the dividend for preferred shareholder. Like here, previously I explained how to calculate this dividend, right? This 6%, something like this. Shares par value times percentage of dividend, we calculate the dividend, right? So we have to calculate the dividend later on based on the how many preferred stock company issue. We have to find it, then par value $10, 6% is the dividend. So up to here, we don't have available information to calculate the dividend. Now let's see, the following transactions affect stockholders' equity during 2018. So following transactions are going to affect it to the stockholders' equity. That means following transactions, some transaction will increase the stockholders' equity, some transactions will decrease the stockholders' equity. You know that, can you remember? The stockholders' equity is sometimes plus, sometimes minus, right? Because of this kind of transaction. So these transactions sometimes increase the stockholders' equity, sometimes decrease the stockholders' equity. So who are them? First one, January 2nd. Company issues 60,000 shares. Company issues 60,000 shares and it is preferred stock. Preferred stock. And from market, company received $12. So this is the market rate. Market rate is $12. But what about the company rate? The company rate is $10, right? Company rate $10, but from market they receive $12. So there is a gain. There is a gain. So how to record this journal entry? January 2nd. So we sell preferred stock and we receive cash. So cash debit. So we sell how many shares? We sell 60,000 shares. And from market we receive how much? From market we receive $12. So this is the money we receive from market. We sell 60,000 shares, preferred stock, and from market we receive $12. So we receive cash. So how much cash we receive? We receive cash $720,000. This is the cash we receive. This is the cash we receive. Why we receive this cash? Because we sell preferred stock. So preferred stock credit. And you, you remember that. So when we record common stock or preferred stock, we follow the par value. Sorry, we follow the par value. So we sell preferred stock, we should follow par value, not market price. Clear? We receive $12 from market, but when we record our preferred stock, we record it the par value. So the par value is $600,000. Now you receive cash $720,000, but your par value is $600,000. So it is a good news or bad news? The value of the share is $600,000, okay? But from market you receive 720. You have a good news, right? So that means this is called gain. But as we are selling share, we cannot record gain, we cannot record loss. We have to record another title, is called additional paid in capital. Additional paid in capital. And what is the amount of additional paid in capital? It is the difference between par value and the market price. The difference, right? So what is the difference here? Difference here is $120,000. This is the difference. So we sell preferred stock. I repeat here again, you can see preferred stock always follow the par value. Common stock always follow the par value. But when you receive cash, we may receive higher amount or the lower amount of par value from market. And additional paid in capital sometimes debit, additional paid in capital sometimes credit. So this question, additional paid in capital is credit because we have a gain. So now we have to write narration in the exam to record issue of preferred stock. This is the short narration you have to write. Preferred stock. So this is the journal about issue preferred stock, par value, and we record gain, additional paid in capital, and we receive cash. Look at February 14. Issue 110,000 common stock now. Before it was preferred stock. Now we are going to sell. Now we are going to sell common stock. And what is the market rate? The market rate is $70, right? So what is the company rate? Company rate is $1. Company rate is $1, but from market you are going to receive $70. $69 is the gain, right? $69 is the gain. So this is good news, and this is the journal. I'm going to show you the journal. So companies receive cash for how many shares? 10,000. 10,000 shares, and the market rate is $70. Market rate is $70, and from market you receive $7.7 million. So this is the money you receive from market, and you sell common stock, not preferred stock. You sell common stock, 10,000 shares. And what is the par value? Par value is only $1, right? Par value is $1, but from market you receive $70. So 10,000. And the remaining are the gain. And for the gain, we record additional paid-in capital. It is $90,000. $90,000, and to record the issue of common stock. So these two journals you issue preferred stock and record gain. You issue common stock and you record gain. Okay. So we done our preferred stock and common stock. Let's see what happened. Next one. Repurchase 11,000 of its own common stock. Okay, and the cost price is $60. So repurchase own common stock means it is treasury stock. So when a company repurchases their own stock, it is called treasury stock. You learned in our previous class, right? If you forget this, you have to go back to my previous class to learn about the treasury stock. So company repurchased treasury stock, and what is the amount company paid? Company paid $60. So the journal is treasury stock now increasing because company buy back treasury stock debit. Treasury stock debit. And how many stock company buy back? 11,000 shares. And company pay, the cost is $60. $60. This is the cost price. So you have to remember that the $60 is called here the cost price. So whenever we are going to record treasury stock, we should always follow the cost price. This is the important point here, right? Whenever we are going to record treasury stock, it should be the cost price. So we buy back 11,000 treasury stock and we pay $60 for the cost, and it is $660,000. $660,000 for treasury stock, and we pay it cash. We pay cash this money. And the narration is to record repurchase of treasury stock. So repurchase treasury stock. So treasury stock. I repeat again, if you don't understand, go back my previous lesson. So treasury stock. So after repurchase, company reissue. Reissue means resell. Company resell treasury stock. Company resell treasury stock. So resell means treasury stock is going to decrease, right? Buyback means treasury stock increase, and resell means treasury stock decrease. And from market they receive, this is the market rate. From market they receive $65. So when they buy it, can you remember? When they buy it, their cost price was $60, right? But when they sell it, they are going to receive $65. So it is their gain or loss? It is their gain, right? It is their gain. So treasury stock increase debit. Now treasury stock is going to decrease. Treasury stock is going to decrease. Look at here. Treasury stock decrease. So how many treasury stock decrease according to this question? 5,500. 5,500 treasury stock decrease. This treasury stock decrease, and we know that treasury stock always follow which price? Treasury stock always follow cost price. So how many treasury stock decrease? 330,000 treasury stock decrease. This is the amount of treasury stock decrease because you sell it, right? And when you sell it, you receive cash. You receive cash. And how much cash you receive from market? From market, you receive cash is $65. $65, and it is the market. From market, you receive $65, right? So it is 357,500. Now we receive more money than our cost. Our cost is $330,000, but we receive more money. So what is the name of this more money? This is called additional paid in capital from treasury stock. So this is the additional paid in capital from treasury stock. So what is the difference here? 27,500. So this is the difference. And this is the gain because we have some more money than the cost. So the narration here is to resell, to record the resell of treasury stock. To record the resell of treasury stock. So this is the narration. So first we talk about preferred stock. Second, we talk about common stock. Then third, we talk about we buy back treasury stock. Then we resell treasury stock. After that, the important part is here. Dividend part. Dividend is a little bit challenging here because you have to calculate the dividend. You have to calculate the dividend. So you can see that December 1st, company declare a dividend. Company declare dividend. They said the guideline, how to pay the dividend. They said that preferred stock will receive $36,000 dividend. Preferred stock. How this $36,000 came? So this is the preferred stock. They are going to receive $36,000. How? How to receive this money? Because how many common stock? How many preferred stock companies sell? Companies sell 60,000 preferred stock. Can you remember? Companies sell 60,000 preferred stock, right? 60,000 shares companies sell. What is the par value? Par value is $10, right? Par value is $10 times 6% is the dividend. 6% is dividend. So if you follow this formula, okay, then it is equal $36,000. Clear? So we have two types of dividend. So you already find what is the amount of dividend. So what is the amount of total dividend? Total dividend. So we find that for the total dividend, okay, $36,000 for preferred stock. right? $36,000 for the preferred stock. Plus, okay, plus we have to find what is the dividend here. What is the dividend for common stock? What is the dividend for common stock? So this is the dividend. This is the dividend for preferred stock. So this is the dividend for preferred stock. Now we have to find out what is the amount of dividend for common stock. Okay. Now question said that if you hold my common stock, okay, if you hold my common stock, for every common stock, you are going to receive $0.25. So if you hold my common stock, okay, you are going to receive, that means common stock, that means number of common stock times this. This is the dividend formula for common stock. How to calculate dividend for common stock? Number of common stock. So you have to calculate how many shareholders are holding common stock, and for each common stock, they are going to receive this dividend. Now calculate, okay, from this information, can you calculate the number of common stockholders? So how to calculate this number of common stockholders? First, you can say that companies sell how many common stocks? 110,000 shares, right? Companies sell 110,000 share common stock first, right? From here, from this, the repurchase, can you remember? The repurchase 11,000 shares of treasury stock. So this is minus. This is minus, right? Because you sell 110, then you buy back, right? You buy back. After buyback, you sell again. Okay. After buyback, you sell again. You sell again to whom? You sell again to the shareholder, right? So first 10,000 minus 11,000 plus 5,500. So 104,500 shares. Clear? So this 104,500 shares is going to put here. Look at here. Common stock dividend means number of common stockholders. Okay. Number of common stockholders is this, right? This is the shares. Number of common stock shares times $25 equal 26,125. So we know that preferred stock is this amount, okay, and common stock is this amount. Common stock is this amount. Clear? Preferred stock $36,000 we calculate here. Preferred stock 36,000 we calculate here, and common stock we calculate here. So preferred stock plus common stock equal total dividend, right? So the total dividend here is 62,125. This is the total dividend. Now, how to record journal entry? Because December 1st is the declaration date, right? December 1st is the declaration date. December 15 is the record date. And December 30 is the payment date. So we have three important dates here. First, we calculate what is the total amount of dividend, right? After calculating total amount of dividend, so this is the total amount of dividend. After calculating this total amount of dividend, we have three journal entries: declaration date, record date, and payment date. But we know that record date do not have any entry, right? Only declaration date and payment date. Let's see. December 1st is the declaration date. So declaration means dividend debit. Dividend debit and dividend not yet paid. Dividend payable credit. So this is the journal entry for dividend declaration. Again, if you don't remember this, go back to my previous lesson. Why dividend debit and why dividend payable credit? If you don't understand, go back previous class. To record declaration of dividend. To record the declaration of dividend. And this number, I already explained how to calculate, right? Now come to December 15. So what is the December 15? The question says that December 15 is the record date. December 15 is the record dividend on December 15. So record date, we don't have any journal entry. So if you want to get full marks in the exam, you have to record no entry. Okay, so if you target full marks, then you have to write this, that December 31st, we don't have any entry. Again, why we don't have any entry? If you don't remember, go back my previous class. Now December 30 is the payment date. So when company pay dividend payable debit, their liability is going to decrease. Dividend payable debit. So dividend payable is now going to debit because we are going to pay it. So we don't have any liability. And now cash credit. Cash credit. So we declare dividend in one day. Now we pay dividend in another day. Pay dividend in another day. And the narration is to record payment of dividend. So these are the journal entries for these transactions. So this is the first requirement. The requirement one said that journalize each of the transactions. After that, company said that prepare stockholders' equity, because from the very beginning, I told you that this is a comprehensive question. Here you will find common stock, here you will find preferred stock, here you will find treasury stock, here you will find dividend, and also you are going to learn how to prepare stockholders' equity. That you already learned from your principles of accounting 1, but we are going to see again. So prepare stockholders' equity as on December 31st, 2018, and assuming that net income for the year was $490,000. So net income is $490,000. Now we are going to prepare stockholders' equity. So this is the format to prepare the stockholders' equity. So you remember, we have to calculate. So this is the total amount. This is the total amount of stockholders' equity. This is the total amount of stockholders' equity. So how this number came? We are going to add preferred stock. We are going to add common stock. And additional paid-in capital, for your information, sometimes add, sometimes minus, sometimes plus, sometimes minus. So first we are going to plus minus these three. Preferred stock, question said that preferred stock $10 par value. Question said that common stock $1 par value. And we have some additional paid-in capital. Can you remember? We have additional paid-in capital for common stock. We have additional paid-in capital for preferred stock. And we have additional paid-in capital for treasury stock. So why this is plus and minus? Because plus is the gain, right? Plus is the gain and minus is the loss. Minus is the loss. Now, according to this question, you can see that this is the preferred stock. This is the preferred stock par value, right? We are looking for par value. Preferred stock par value is $600,000. We can write this number here. Preferred stock par value, $600,000. What is the common stock par value? Common stock par value is $1,110,000. Common stock par value is $1,110,000. So preferred stock par value, common stock par value, right? Now additional paid-in capital, you have to do some plus and minus here. You have to do plus and minus. Look at the first additional paid-in capital. So this is the first additional paid-in capital. It is credit side. Credit means gain, right? Gain means plus. Gain means plus. So 120 gain. So it is plus. We have another additional paid-in capital. This one, look. We have another additional paid-in capital. It is also credit, right? It is also credit. So plus. Credit, credit, plus. Credit, credit, plus. Then we have another paid-in capital, additional paid-in capital, also credit. We have also credit. So it is also plus. It is also plus how much? So this question do not have any loss. This question don't have any loss. All are credit. As all are credit, that means this is the case. We have all credit. All credit means credit, credit plus, right? Credit, credit plus, we don't have any loss. So we don't have any debit. So if you have debit like this, it should be minus. Clear? If you have debit. But in this question, we don't have any debit. So it is plus. So if we add all three together, this is 7737,500. 7737,500. So if know this is our preferred stock, we know this is our common stock, and we know this is our additional paid-in capital. We add all together, and it is called total paid-in capital. So total paid-in capital is 844,7,500. So this is the total. This is the total paid-in capital. Now from this money, retained earnings, you remember my last class, retained earnings is going to add. Retained earnings is going to add, and treasury stock is going to deduct. Because what is the meaning of treasury stock? Treasury stock means I already buy back this share from you, right? So this money, I already give it to you. So I am going to record it as a minus. So can you remember how to calculate the retained earnings? The formula is net income minus dividend. So last class I explained how to calculate the retained earnings. Net income minus dividend, right? So the question said that this is our net income. Question said that $490,000 is the net income. $490,000 is the net income, and we also calculate our dividend. This is our dividend. So net income minus dividend. Net income minus dividend equal retained earnings, right? So the retained earnings is how much? Retained earnings is 427,875. This is the retained earnings. And what is the amount of treasury stock? You can see that treasury stock debit $60,000, right? Treasury stock debit $60,000. Then we have another treasury stock, it is credit. We have another treasury stock is credit, and debit and credit is the minus, right? Debit and credit is minus. So minus, so treasury stock debit minus treasury stock credit, what is the balance? The balance is $330,000. This is the balance of treasury stock. And you can see that it is minus. You can see that treasury stock is minus. So we have these three plus retained earnings minus treasury stock equal, this is the total amount of stockholders equity, and it is 85,45375. So this is the total amount of stockholders equity, and this is the relationship plus or minus. So according to this question, we have all additional paid-in capital credit, so we make it all plus, then retained earnings plus minus treasury stock, we receive this money. So we receive this money means you are the shareholder, this is your money, right? You can claim this money in future. As the shareholders, for example, you all people are shareholder of this company, and it is your money. You can claim this money anytime. So this is about question 3. And similar to question 3, we have another question, is called question 4. And let me solve this also. So Onjo Construction has 1,000 shares of common stock outstanding. They already have 100,000 of common stock. You understand? They already have this amount of shares. When? From the very beginning of 2018. So from the very beginning of 2018, they already have common stock shareholders balance. It is 100,000 shares. Now, Onjo Construction has the following transactions after shareholders equity of 2018. So after that, they have some additional transactions. What are the additional transactions? May 1, you can see that. May 1st, they issue 65,000 additional shares of common stock. So they already have 100,000 shares. Now they sell 65,000 additional shares. 65,000 additional shares of common stock. So what is the amount of common stock at this moment? 100,000, 165,000, right? 165,000. Now total common stock available at this moment. So the new share they sell from market they receive, okay, from market they receive how much? From market they receive $62, but the price par value is $1. Par value is $1. So they have gain or loss. They have gain, right? Par value is $1, but from market they receive $62. So $61 is the gain. So look at this journal. It is like this. Company sell 65,000 common stock. 65,000 common stock they sell, and from market they receive $62. Okay, from market they receive $62. And what is the amount here? The amount here is $4,030,000. So this is the cash they receive from market. But what is the value of common stock? Par value. Par value is $1. Par value is $1. So par value is $65,000. Par value is $65,000. And the difference is the additional paid in capital. The difference is the gain. It is additional paid in capital, $396,500. $396,500 is the additional paid in capital. To record the issue of common stock is the narration. This is about March 1st. Company issue common stock, receive cash, and record the gain. Repurchase treasury stock. Repurchase treasury stock, and from market they receive $65. So this is the cost price. You have to remember, this is the cost price. Important amount. So whenever we are going to record treasury stock, it should be the cost price. So we have journal entry here. I can copy it. Company repurchase treasury stock. So treasury stock debit, how many treasury stock they purchased? 6,000. They purchased 6,000 shares of treasury stock. And what is the cost price? Cost price is $65. $65 is the cost price, so $390,000. $390,000. Okay, is the treasury stock. So they buy treasury stock 6,000 shares, and market price was $65. So it is their cost. It is their cost. So now dividend. Again, we have to do some calculation for the dividend. Declares dividend when? Company declared dividend on June 1st. And what is their declaration? They said that if you hold my share, because this question do not have any preferred stock, only common stock. If you hold my share, you are going to receive $2 dividend per share dividend, right? Now we can do the calculation here. We can do the calculation. Common stock. So number of common stock. So you have to calculate number. You have to calculate number of common stock equal. So equal. First, we have a balance. We had a balance. $100,000, not dollars, sorry. 100,000 shareholders, we already had a balance, right? After that, how many we sell additional? We sell additional 65,000. Okay, we sell additional 65,000. From here, we buy back. We buy back 6,000. It is minus. So 100,000 is the previous balance. We purchase 65,000 minus 6,000. 159,000. 159,000 shareholders, right? Times per shareholder is going to receive $2 dividend. So $318,000. $318,000 is the dividend. This is the dividend. This is the dividend, right? Now, what is the journal for this dividend? This is the journal for dividend. Dividend debit. and dividend payable credit. Dividend debit, dividend payable credit, and this is the amount, $318,000. So this is the record date. Sorry, this is the declaration date. So we have a record date. Record date is June 15. Okay, right? June 15 is the record date. And I told you that if you want to get full marks, then this is the record date. You have to write no entry. So this is for those who want to get full marks. No entry. And July 1st is the payment date. July 1st is the payment date. So this is the journal for payment. Dividend payable debit, cash credit. Payment date. Now what happened October 1st, 21st? Company reissue. Again, reissue means resell. Company resell $3,000 shares of treasury stock. Company resell 3,000 shares of treasury stock, and the market price is $70. So cost price of treasury stock was $65, but they resell something, and from market they receive $70. So this is the journal. This is the journal. So company resell 3,000 shares. Company resell 3,000 shares, and the cost was $65. Look, this is the cost. This is the cost, 65. Yes, cost was the 65. So cost was 65. You can see cost was 65, but from market they receive how much? From market they receive 70. Yes, this is the case. So they sell 3,000 shares. They sell 3,000 shares of treasury stock. The cost price was $65, but from market they receive $70. So it is $210,000. So this is the money they receive from market, and their cost was $195,000. So this is their cost. This is their cost, but they receive more money from market. So remaining is called additional paid-in capital from treasury stock. It's $15,000. This is October 21st. Company received cash by selling treasury stock, and the difference is the additional paid-in capital from treasury stock. So this is all about this chapter. This is all about this chapter.